Earnings season is here and it kickstarts this week with TCS reporting their numbers on 12th, Infosys on 13th. Reema is joining in now with the key expectations. Reema, over to you.
Thanks so much for that. So this is going to be one of the trickiest quarters to lay out expectations, considering that we are in a heightened period of uncertainty. Just look at the broad divergence in expectations. So for instance, for TCS, the range of the constant currency quarter-on-quarter revenue growth ranges from 0.1 to 1.7%. For Infosys, it goes from minus 0.1 to 1.1%. But look at the numbers for HCLTech. Now CLSA is expecting a degrowth of 2.9%, but Nomura is expecting a growth of 1.1%. So the expectations are all over the place, but as you can broadly see, the growth this quarter is going to be lower than the prior quarter. Q4 less than Q3. And the key reason for that is the banking crisis in the US regional banks and the European banks may have induced a greater caution, impacting the overall tech spends by banking clients. And plus, typically, March is a seasonally weak quarter. Now, the margin performance amongst large cap is also likely to be more divergent. Now, for TCS, we're anticipating about a 50 basis points margin expansion, but for HCLTech, margins could come down on a quarter-on-quarter basis. The key is going to be the FY24 guidance. And here we're anticipating Infy to be conservative and guide for a 6 to 8% revenue growth, constant currency revenue growth. But this will be lower than the 16% aught that they clocked in last year. That's FY23. But Infy is Infy, so we're expecting them to be fairly conservative. For HCLTech, again, it's very hard to get a consensus this time on guidance, but it looks like it could be a mid to high single-digit kind of growth because you've got a minimum of 4 to 6%, and you've got some analysts even going up to about a 10% growth. But both HCLTech and Infosys are likely to range the upper end of their margin guidance. These are the numbers. For Infosys, 21 to 23% versus this year's margins at 21 to 22%. So the upper end of the margin guidance is likely to be raised. Now let's quickly run you through some of the brief and quick expectations of what we are going to be watching out for. 1, the extent of impact due to the global banking turmoil on deal wins. 2, retail, high-tech, Europe. These were flagged off as some of the weak pockets in the prior quarters. Does the weakness continue this time? Will normalcy return in the second half of FY24? Because what analysts are penciling in is that H1 is going to be weak, but things pick up in the second half of the year. Company-specific TCS is eligible to announce a buyback. It's eligible, but will it do so? Leadership changes have been announced right at the top for TCS and Tech Mahindra, so they will take center stage. And any change in priorities, strategic direction, new appointments as well, right, under them. Now, TCS has to announce a new BFSI head. The COO, Chief Operating Officer, will be resigning or retiring next year. And finally, on deal wins, are we seeing a delay in deal ramp-ups? Are sales cycles getting longer? Is there slower revenue conversion? So all these are some factors that we will be watching out for. And finally, considering that the IT stocks have seen a bit of a correction, the valuations now are pretty much what they were compared to their 5-year average. So are they pricing in the uncertainty, the uncertain environment that we're currently living in? Back to you.
Okay, thanks a lot, Reema, for that. Let's pose that question to Apurva Prasad, who's been tracking this sector for ages now. He's the analyst at HDFC Securities. Apurva, it's all up in the air, right? I mean, nobody knows what these companies are going to speak about, considering that growth is slow. Client spendings could perhaps be, under a bit of pressure. But Reema was talking about a 6 to 8% FY24 guidance from Infosys. Is that something that you are expecting as well, or could it get worse than that?
Hi, good morning, Surya. So we do expect it should be in that range. In fact, we believe that the band could probably be a bit wider. So it could be something like a 5 to 8% looking at the current uncertainty. But let's not forget the historical relative conservatism of Infosys. So meaning if you look at historically what's the first guidance been and where they've ended up for the year, typically tends to be higher. So I'm saying 6 to 8 is probably where I believe consensus expectations are. 5 to 8% is, I think, is possible guidance.
All right. Hi, Apurva. Good morning. Thanks so much for joining in. Well, for the sector on the whole, I think now valuations have traded to sub 1 standard deviation. How much of the bad news is already in the price? Would it be constructive from here on?
Yeah, Nigel. So I think we should be more selective from here on. So it is certainly less than 1 standard deviation. So a lot of risks are, to an extent, priced in. We have slightly moderated our growth estimates. This is more near term, so Q4, Q1. we do expect a sequential pickup beyond that. And at the same time, some of the factors that we're looking at while we're being selective is high line of sight of growth, the probability of outpacing near-term expectations, and the magnitude of growth. So based on that, I believe one needs to be still a lot more selective. At the same time, with valuations that has corrected on a relative basis. I mean, the sector was at 40-50% premium to Nifty, and it's a lot lower. It's more like long-term averages, even if you compare valuations with the Nasdaq. And if you also look historically what it's done over the last 20-year period, interestingly, Q2, which is the September quarter, it accounts for about 50% of the sector return. So we're getting there. Q1, which has traditionally been stronger, we do have a lot more macro headwinds. So I think being selective is a stance that we continue to recommend.
For TCS, what is your expectation? Of course, apart from what they talk about, the earnings, etc., all eyes will be what the priorities are under the new CEO and the continuity of the current organizational structure. I think that's what the street is looking out for as well. But for shareholders, what should the primary objective be this time around?
Yeah, so from a quarter standpoint, we expect a modest 1% sequential growth, which within the tier one, they should be the highest. We do expect them to improve their margins by about 50 basis points. So the run rate that they do intend to hit by the year end is I think that's likely to continue. I think sort of leadership transition, more commentary around that, how the org structure changes is likely to play out. I think these will be some of the important factors. Apart from commentary on some of the core verticals, TCS being sort of having a higher exposure in that. So I think commentary around BFSI and some of the core geographies, because we've seen some kind of a divergence even in the commentary of core geographies. So North Am versus Europe, I think these in any case would be important.
All right, you're expecting a degrowth, a sequential degrowth for a couple of companies, right? Large cap IT. Could you tell us which one are those?
Yeah, Nigel. So that's HCL Tech. It's partly a bit of seasonality. So Q3, the PNP business normalizing. So it's HCL Tech and Wipro. So it's slightly below the bottom end of their quarterly guidance. The two companies where we expect constant currency.
Okay. In the last fortnight or so, KPIT Tech was in the eye of the storm, so to speak, right? After that JP Morgan downgrade came in, they spoke about de-rating of the stock as well because perhaps of the scarcity premium going away with Tata Technology IPO being announced. But for a long-term shareholder, what do you do now if you've sort of made money in KPIT Tech, but now these uncertainties have cropped up?
So while we don't cover KPIT, it's not in our coverage, but what we can talk about is the industry tailwinds in the auto ER&D space, which is certainly a big growth driver for some of the peer sets, be it a Tata Elxsi or be it an L&T Technology Services. So I think some of the industry tailwinds continue to remain. I think that remains unchanged. But broadly, if you're looking at the ER&D space, on a relative basis to IT services, valuations do seem a lot more.
Okay, pleasure speaking with you, Apurva. Thanks a lot for joining in, and hopefully we'll get to chat with you again post the numbers come through, get a more nuanced analysis on the Q4 numbers. Thanks a lot. Well, for the market, very quiet.